Hi there, welcome back to Compliance 101 by Red Compass, your go-to resource for demystifying the ever-evolving regulatory and compliance landscape. So, today, we're continuing our conversation on the new tax regime in Nigeria. And today we're going to be discussing the Nigeria Tax Administration Act, which is the NTAA for short. So the NTAA is the Administration Act that tells us or tells everyone how taxes ought to be filed, how they are enforced, and also what is the regulatory body to pay your taxes to. Now, the NTAA manages how taxes are filed, enforced, and administered. And it doesn't create new taxes. It's just the engine that powers the entire administration of taxes within the country, ensuring that tax filings become more transparent, faster, and also digital. Furthermore, the NTAA shares responsibility between the Nigeria Revenue Service and state revenue services, such that the NRS or Nigeria Revenue Service collects taxes such as company income tax, VAT, and also non-resident income taxes, while the state revenue services continue to collect individual taxes and also other local taxes, ensuring that there can be reduction in duplication of taxes. Now, every taxable individual within the country or in Nigeria is required to get a tax identification number. And this is important for you to be able to do business validly in the country in terms of operating a business account. And another reason why this tax identification number is also relevant is that it allows you to get contract, or it gives you a leverage whenever you're applying for a contract from the local, state, and federal government. Doesn't mean that it gives you the contract, it just means that you need the TIN to be able to get a contract from the government. Every bank, financial institution is also required to collect the TIN from their customers in order to validly operate their account. So that means that if you have a bank account, you're required to update it with your TIN, or if you're trying to open a bank account, you're required to submit your TIN. Additionally, non-resident businesses, that means businesses outside of Nigeria but which get income or revenue from Nigerian users or within Nigeria, are also required to get the tax identification number. Now, let's talk about technology. The NTAA also outlines or provides for the deploying of the electronic fiscal system. And this is a digital tool that reports and records tax filings in real time. So this means that for some entities like banks and other financial institutions which are required to file their taxes, some are required immediately, while some can be filed at specific intervals. Those kind of entities are required to do that using the electronic fiscal system in real time at certain situations. Now, flowing from that is the thing about transparency. The NTAA now requires banks and other related institutions to file quarterly returns. And these returns must outline individuals or individual customers who have transactions over 25 million monthly or 100 million for companies monthly. And these records would be accessed by tax officers in order to verify or to ensure that proper tax filings are being done. And this record must be kept for a minimum of 7 years. So, withholding taxes. Now, the thing about withholding taxes in practice is that oftentimes it is withheld and paid later, or sometimes it might not even be withheld. The NTAA now mandates that withholding taxes must be withheld at the point of payment. So that means if you're trying to make a transaction and you're supposed to pay withholding taxes on that particular transaction, you need to withhold the tax at the point of payment to the other party and also remit to the appropriate authority. In relation to virtual asset service providers, the NTAA itself does not create the taxes to be paid for this. It's the Nigeria Tax Act that outlines the taxes to be paid by VAS providers, VAS being virtual asset service providers. Now, let's speak about the highlight of it all. I'm sure that's what you want to hear: penalties. What are the penalties? Penalties for non-registration attract 50,000 naira for the first month, then 25,000 naira for every month after that. So that means by the time the NTAA comes into effect by January 1st, 2026, and you haven't registered, you get to pay 50,000 naira for every month that you have defaulted, and then 25,000 naira for every month after that. For tax filings, for the first month of default, it attracts a 100,000 naira fine and then 50,000 naira for every month after that. So this implies that when you're ready to make your tax filings or you're ready to register for taxes, you will now begin to pay for all these months of default. And by January 1st, 2026, if you are yet to register, get a tax identification number, then for the first month of default, all of these penalties begin to kick in. Now, for the case of unpaid taxes, this attracts a 10% surcharge plus interest. This means that if you're supposed to pay X number of taxes or X amount for taxes, you get to pay a 10% of X plus X and an interest. So it means that you're now paying for 3 different things. Finally, the NTAA is now the overarching Tax Administration Act, which means that it has consolidated every other administration of taxes laws into one, ensuring that we have a faster, digital and real-time system where you can automate your taxes and get everything done in one system. That's it for today. Thank you for staying to the very end. I hope you found it engaging and enlightening. You can share your thoughts in the comments box below. Tell us what you learned or if you have any questions. Also feel free to reach out to us at Recompass at any of our social media platforms. Okay, don't forget to like, comment, share and repost this video. Till the next episode, bye.